love the channel and find it useful in becoming a happy retiree. Subscribe today. Good morning to the phones. Mary joins us from Decatur. Mary, what's up? How can I help?
Hi. I have a question about a transfer of funds from a retirement kind of government fund with very low fees.
TSP, I bet. Was it the TSP plan? Thrift Savings Plan?
Yes.
Okay. Into an IRA, it sounds like.
Yes.
Okay.
And
so what's going on?
So the management fee is about $350 a month, and it basically was to have access to, I guess, one of these programs that if the rate goes so low or so high, they can make an automatic transaction so that your money isn't exposed to market risk as much.
So it's a market timing model. So it's $4,200 a year in fees, and what's the amount? What's the total?
It was right now it's worth $286. I think when I went in, it was $280 or something.
Okay,
like
so that's
that.
exactly 1.5% a year is the management fee. So how is this something you've done for a while, or has it just been 2017?
I did it in May 2016.
And how are we doing so far since May? Is it how much? Or I guess you just told me. You said you started with 280, and it's at 286 today, right?
Mm-hmm. I'm not impressed at all, particularly since I left the government. The management fee at that point was 1%. I mean, it was 0.07% or something, very low.
Yeah.
So I actually think I'm losing, and I'm not pleased about that. I don't really think it was a good investment decision.
Well, it's tough. I will tell you that if you go back over the last year, and this isn't the exact period of time, but if you go back a year from now, if I pull up this chart, I'm looking at the S&P 500 is up about 16%. The Dow is up about 19%. Now that's July to July, but really yours is almost, I would say, virtually flat. So, and you're paying 1.5% a year to do it. Well, what's 6,000 on 2? You've made about 6 on 280. 6. Wow. There we go. 6 divided by 280. Yeah, you're up about 2%, and the market's up about, well, call it 15%. So yeah, so you're paying a lot for really. You've gotten zero. You've gotten almost no benefit out of this, Mary. Now, that part of that could be a lot of these timing models are promising the world as though they're going to capture all the upside of the market and just none of the downside, and that just rarely happens. Usually, I see one of these timing models that's meant to protect you. They really, very often, they do a pretty good job of protecting. But they just are. It's a lot like parking your money in the mud, and it just gets stuck and it sits there. So, I think to some extent you're probably paying too much. Number one, it's the strategy is the real issue, beyond the cost. So, I think it's time to look elsewhere here for a variety of reasons. If you'd like to find me and the Money Matters team, Mary, we're happy to talk through some other options. Go to wesmoss.com, WESMOSS.com. Those emails come straight to me and the team. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.